Hello traders and welcome to another video review. Today is Thursday, November 7th, 2024. Let's find out what's going on the economic calendar for today. Building approvals in Australia are in line with the expectations of 4.4%, a little bit up from minus 3.9 in the previous month, and the trade balance shrinks to $4.6 billion. Data from China were quite important in terms of the trade balance. Trade balance increased to $95 billion. These days, imports are down minus 2.3%, and the exports are up towards the level of 12.7%, easily beats the expectations of 5%. So very good bunch of data from the China. We are still waiting for the Halifax price index, house price index from the UK, and then at 8 o'clock we got the German industrial production and the German trade balance. Plenty of the interest rate decision on the Nordic states like Sweden and Norway. Then the retail sales data from the Eurozone at 11 o'clock, and the mortgage rate in pound from the UK. Quarter to 45 minutes past 11 that we have the ECB Elderson to give a speech, and then we got the main event of the day, which is the Bank of England interest rate decision. The market participants expect Bank of England to cut the interest rate from 5 to 4.75%. So that's at 1 o'clock. And during the US session, we got the initial jobless claims scheduled for release at 2:30. Then again we got some speeches from ECB Lane, and at the end of the day we got the another key event of the day, which is the Fed interest rate decision. The market participants expect a cut from 5% towards 4.75. Together with the interest rate decision, we got the FOMC statement and FOMC press conference. At the end of the day, at 10:30, we got the Fed's balance sheet. So very important day for the traders. Plenty of the important data releases, and plenty of the data released already during the Asian session. So because of the day is so rich in the data releases, let's focus on the majors, and let's focus on the euro dollar and then on the British pound as well, because of the Bank of England interest rate decision. So the euro dollar for our chart is showing us some sort of the base right now, made at the level of 1.0683 during the extremely oversold conditions test. So the RSI went below the level of 30, and the low was at the 26 points, and now the market is trying to bounce. Where we zoom in, we can clearly see that the level of 1.0760 is now the major technical resistance for the bulls, as they are having problems to break above this level. Even if they do, there is a series of the technical resistance levels just ahead of them, from 1.0760 to 1.0806 as well. So might be quite difficult for the bulls to rally higher on the euro dollar. However, if of course the Fed keep the current situation and will not cut the rates, then the market might go even lower. However, in the situation when Fed will actually cut the rates from 5 to 4.75%, the market participants will likely see the opportunity to buy the US dollar and the euro, right? So we will have another wave to the downside. So if everything is in line with the expectations, we should see another sell-off wave in the euro dollar. Maybe not that big as we've seen yesterday, with this big decline after the presidential election results. However, there is still a potential for this market to go again a little bit lower, even in a terms of spike down. Otherwise, this market can of course, move a little bit higher, break above this technical resistances, retrace some of this downside movement, and even test one of this technical lines, which are of course the moving averages, 150 periods moving averages. So for now, the situation is quite clear. We are waiting for the data to be announced, and the volatility is a little bit subdued. The market participants want to see the outcome of the Fed interest rate decision first, before any major move will be done. From the bigger point of view, when we look from a little bit like this, we got definitely some sort of the double top here, this one and that one, and this very nice trend to the downside just ahead of the presidential election, then a slight bounce that lasted apparently like 2 weeks, not even 2 weeks, like 10 days, and then of course a very big sell-off to the downside. So definitely the market is under the bearish pressure, and right now there is no indication that the bears are trying to stop the pressure or reverse the trend on the euro dollar. All right, the next pair will be the cable, and the cable is in the particular situation as well, because it tried 2 times to break out of the channel. Even if we make it a little bit longer, we can still see that the first attempt was 1.3041 and the second one was exactly 1.3041. so it looks like this is the key level in the short term for the for all of the market participants, especially for the bulls, right? Because they need to break above this level in order to get out of this channel and move higher. We have the first false breakout, new low. We have the second false breakout, new low, marginal low, nevertheless still a low. Let me just mark it for you. So we now know that the 1.2833 is now the other low on the cable, and there is still a multi-time bullish divergence being played out here. So maybe the Bank of England interest rate decision will make something today positive for the bulls, so they can retrace this movement to the downside, and then of course make some attack to the level of 1.3041. Otherwise we will keep going lower, despite the fact that this this bullish divergence is now at least 1 month, over 1 month old. Right, so the market is definitely trending. It's trending to the downside, but so far the bullish divergence has not been resolved just yet. The market keeps making lower lows. The divergence keeps making higher lows, except the one here, and that's about it. Even between this low and this low, we got another mini divergence, positive divergence, so we should see some upside movement. So the Bank of England is following the path of the Fed and wants to cut the rates as well, little by little. So the outlook will be that the market participants might continue to see the British pound as much more attractive than the US dollar, and might start buying the British pound. So this might be the trigger that will resolve this bearish divergence. Major technical resistance, of course, 1.30. This is the first one, and the 1.3041 is the second one that need to be violated in order to continue the uptrend. And last but not least, let's take a look at the Bitcoin, because we got another higher high at 76,420, and the market is now trying to move a little bit lower, pull back from this highs after the bullish divergence was made already on this market. So we got this high and we got this high. So as you can see clearly, this is the higher high, and the market keeps making this higher highs. Then on the momentum is something completely different. We got this high, and the higher high was made with that momentum. So the bearish divergence is on. We should see some sort of the profit taking we should see some sort of the correction here. We got 5 waves to the upside, sorry, to the upside done already. Let me just label them for you quickly. We got the wave 1, wave 2, we got the wave 3 potential for the wave 4 and wave 5. So the 5 waves are done. We should see the levels around 74,000 to be tested. Even the level of 72,732 might be even tested if we consider this as the wave 4. So please prepare for the downside movement on the Bitcoin. Correction pullback is coming our way. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.